Welcome back, all you cool cats. Today we're going to work our way backwards. We're going to start with TLT, then move on to SPY, QQQ, NVDA, and more. One of the reasons I wanted to start with TLT is to do a quick recap of things that we've gone over before. Remember, we had this descending triangle here with the pattern target somewhere around here, around 97.50. We had a sell-off here, a bounce, and then look right here, from here to here, we completed that pattern target. Then we had a falling wedge whose pattern target was somewhere right around this key level. Look, came up, pulled back, hit that pattern target, and then rejected sharply. Then from there, we formed what appeared to be a falling wedge. 80% or more of the time, falling wedges break to the upside. But what happened here is we had a key catalyst. We had an initial false breakout, and then when the non-farm payrolls report came out so strong, long bonds just sold off like crazy. But here's the interesting thing. Let's zoom in a little bit. Look at the pattern target. This right here, this yellow line, that is the measured move. So from where we began to break down, we basically met that pattern target exactly. Now, something that's really interesting to me that I'm seeing, it may be a little bit too soon to see, but you can see here in orange, if this is forming a descending channel, then this means that potentially this could bounce all the way back up. It depends on what day it hits, but it could come all the way back up to around 98.30, 98.03, 97.95, somewhere in the 98 range. If that's the case and you bought calls on TLT, there is hope that you could at least get out around break even for us or a small profit. And another important thing I wanted to point out is this right here, from here to here. If this ends up being a bear flag and this continues on down, this is the measured move. This is targeting somewhere around 94.50, which interestingly enough, basically lines up perfectly with the daily simple moving average, the 200-day moving average here. So it may be a little bit too soon to know if this is actually in a descending channel. I think we're going to find out on Monday. But even if it does break below this and it hits that 200-day moving average, I think it's very likely to have a sharp bounce up. And this right here is the Bollinger Band. So you can see the Bollinger Band is deeply, deeply stretched right now. And we look on the daily for the Ichimoku Cloud support. This would be placing it confluent with a lot of support levels. Now, if it broke those key support levels and yields continue to rise, don't lose hope because there is another support level, very key. Notice this line here in purple. This was the neckline of basically this huge inverted head and shoulders pattern. At the same time, we have this long running support line that every time that it's touched it, TLT has bounced. So if you look at the convergence here of this key support level, both of these lines, we're looking at around 93, give or take, which also has confluence with the 50-period moving average on the weekly. So I think if TLT were to come all the way down, I think 93, 93.50 maybe, is going to be a very, very key support level. And if it holds, then this inverted head and shoulders pattern could continue playing out, likely going up somewhere around like 114 or higher, which as you can see would basically be targeting the 200-period weekly moving average. And a lot of people were very confused as to why after the Fed cut 50 basis points, long bonds actually started going down in value. But when you look at the history, that's what happens whenever the Fed cuts rates. There is typically an initial sell-off in bonds followed by a rally in bonds. And what's a little spooky about that is this occurred right around 2007 before the Great Financial Crisis. All right, hopefully second time's a charm. I recorded this at first, but it only recorded the audio and it didn't capture any of my video. So let's continue. In my last market analysis video, I shared this falling wedge pattern on the overall dollar strength index, and I said that it was likely to break out and eventually reach somewhere around 103.25. The symmetrical triangle pattern on the RSI also seemed to be confirming that. As you can see, the Dixie has broken above this very long running resistance line right here in yellow. And interestingly enough, if we zoom out to the daily time frame, this pattern target here for that falling wedge has confluence with the upper resistance of the Ichimoku Cloud as well as the 100-day simple moving average, as well as having the upper Bollinger Band extremely stretched by that point. Considering that the overall market has been rallying with Dixie, which is something that typically doesn't happen, I have to wonder if once it meets its pattern target here, if the overall market as well as Dixie will begin a big pullback or a sell-off. I always like to share the NYSE ADD market breadth indicator with you because it shows overall trends for the overall market. We've followed these big patterns before and we saw how those things broke out. Right now, it appears to be forming a big falling wedge pattern, which typically tends to break to the upside. But what's very useful about having these patterns charted on your own platform is go back and look at the history. On the 19th of September, did the overall market begin to turn down? On the 20th of September, did the overall market start to push back up? On October 3rd, did the overall market start to push back up? The answer is yes. So I would expect, just based on technicals alone, that we're expecting to see probably a red Monday if this resistance line holds, or we might get a false breakout followed by a red Tuesday. Now this is purely based on the technicals. This isn't based on any sort of fundamental catalyst or anything like that. Now taking a look at SPY, we've got the symmetrical triangle pattern. We covered the upper and the lower pattern targets for that in the last video, which I'm going to link above. What I want you to pay attention to is the potential for this to have formed another upper resistance line, which if you extend out the symmetrical triangle, the lower support line, extend it forward, we're now looking at a potential rising wedge, where if this gets up here, interestingly enough, SPY hit the pattern target of the giant cup and handle pattern that we've been going over for weeks. That was, basically right around 576. And then it rejected sharply off of there. Obviously, SPY is trying to come back up. So the question is this going to be a false breakout of this triangle pattern, which eventually it would potentially take us all the way down to somewhere around 516, which again would be a new higher low? Or will we fulfill the upper pattern target of the symmetrical triangle, or is this rising wedge pattern telling us that the market is about to have another big sell-off, in which case we might expect it, if the market got up to somewhere around 582, 583, we would expect it to break down to around 545, which again would have confluence with this much longer term support line that's been going on for multiple years. And if you need another reason to be bearish in the coming few days, we see this symmetrical triangle pattern on the RSI. We're at resistance there. And if you look, if SPY were to come up and touch this resistance line somewhere around 578 to 579, we would also expect that to basically be the upper resistance, the upper Bollinger Band by that point on the daily time frame. So at the least, I would expect a big pullback, and we potentially might see this rising wedge pattern play out, which even more confluence, that pattern would be bringing us right down into very strong support on the daily time frame with the Ichimoku cloud. And are we seeing the same things on QQQ? Yes, we are. If we draw a trend line between this top and this top, we see we have an upper resistance line that appears to be forming a rising wedge pattern. Even just taking a look at the RSI on the intraday, this is the 4-hour time frame, we're already getting into an overbought condition, and yet prices barely moved up. This tends to be an indication that the bulls are getting a little bit tired. And we know that symmetrical triangle patterns are notorious for having false breakouts. So there is a potential that we broke out of the symmetrical triangle. Maybe we'll even consolidate for a little bit, and then we're going to hit this resistance, may even break above it just slightly, and then begin a sell-off if this is a valid rising wedge pattern. There is always the possibility that the upper target for the symmetrical triangle pattern will be met. Again, I covered that in my last video, but we even have more confluence on QQQ than we do on SPY. Look at the confluence of this resistance line in yellow, this resistance line in purple, combined with the upper Bollinger Band. We would be looking for QQQ to hit somewhere around 495 and then potentially sell off. Let's say it continues higher. Notice how the apex for this rising wedge pattern terminates at previous all-time highs. If this turns into a double top, bye-bye markets. The bears will feed. And this is not to try to instill worry in you, but historically, we can often see the markets rally after the first rate cut and then subsequently sell off. If all of the US and Chinese stimulus doesn't stimulate the economy and jobs, it's not going to help the equities market. If you love cats and markets, make sure to show your support by liking and sharing this video. All right, I want to follow up on NVDA. It is still trading within its own symmetrical triangle pattern. Right now, it is right at resistance. We can see that when it hit that resistance line, it rejected sharply, but we had a lot of bulls defending this area right around 122. So we're consolidating right below resistance here. I'm interested to see, will we have a pullback to one of these two support lines, or will we have a breakout? Keep in mind that even if we break out, this could be a false breakout of the symmetrical triangle pattern because we have this very, very long running resistance line to contend with. And just to show the significance of this resistance line, I want to show you this goes all the way back to October of 2018. So we can see how the Bollinger Bands here are very contracted, indicating that this is about to have an explosive move in one direction as volatility expands. The upper target for this symmetrical triangle pattern is somewhere around 165 to 167, but if it decides it wants to break to the downside, we're looking at a target between like 67 to 70, which of course would fill these daily gaps. And not only would it fill these gaps, but if we zoom out to the weekly, we can see it would put us right at very strong support. If you want more of these high probability analyses, make sure to subscribe and tap that notification bell so you won't miss them. All right, and then of course we gotta take a look at the economic catalysts that are coming out. We got a lot of FOMC member speakers that are coming out throughout the week. A few treasury auctions like the 3-year note auction on Tuesday, the 10-year note auction on Wednesday. Of course, on Wednesday, we've got the FOMC meeting minutes coming out. That could potentially be a market-moving catalyst. But the biggest catalysts, in my opinion, are the ones coming out on Thursday. We got core CPI coming out. That could potentially be market-moving. If CPI comes in hot, that's potentially going to lower expectations for future Fed rate cuts. And then, of course, on Friday, we've also got PPI that's coming out. That's going to be pretty important as well. And it's that time of year again. We're going to be getting into the earnings season. So we're taking a look at Moomoo's earnings calendar. There's not a whole lot this week. Got some big names like Shell giving earnings on Monday. We've got Pepsi pre-market on Tuesday. And a real big one is going to be JP Morgan pre-market on Friday. And of course, it's not earnings, but the NVIDIA AI Summit is going to be this week between October 7th and 9th. So that could also be market moving. As always, nothing I say is financial advice. Best of luck this week, cool cats. And without further ado, let's look at today's trading rules to live by.